Let's get across what is likely to move markets this week. There's plenty on the data docket. Let's get into it. Peter McGuire joining us from XM. Peter, a very good Monday morning to you. As I mentioned there, it's particularly overseas, a packed diary, in fact, headlined clearly by the FOMC meeting.
Absolutely, Andrew. I'll tell you what, the gloves are on this week. It's going to be absolutely electric, and I think it'll be quite exciting for traders. And as you mentioned, let's see what the Fed says, what their opinion. We're going to hang on every word from Fed Chair Powell, and whether we're going to see any form of rate cut before September, or as Larry Summers says, we might go the other way. So yeah, there's a lot of news, views, and of course, Eurozone, don't leave that out of the equation as well. So it's, game on for currencies, commodities and stock indexes.
Yeah, not just the Fed. I mean, after the Fed, in fact, we get a raft of jobs data out of the States too, clearly with the biggest one being the non-farm payrolls at the end of the week, which obviously post the Fed decision. How's that tracking at the moment?
Well, Andrew, it was extraordinary last month. I mean, the growth there as far as NFP on the at the start of April was very, very, very strong. So let's just see how we go. The first Friday of May, it could be it's either going to, and it's so hard to forecast because you can be out by 80 or 100% quite easily. So I'm just going to sit here and observe. I want to see how Wednesday drops, and then naturally, do you trade into that NFP or you're going short? Or there's a lot of objectives that I think you've got to cover over that 48-hour window after FOMC.
So, Peter, you did mention there, perhaps there's been a bit of a shift in the narrative, that not talking so much about rate cuts and where they're likely to happen. Even some talk now of potential for rate hikes. That's certainly the case here in Australia. What are we seeing in the States, though? This is, of course, all about inflation. That deflation we've seen has essentially disappeared. So there are some concerns that we're seeing inflation reaccelerate.
Absolutely, Andrew, and that's the challenge that I think they all face, central banks, certainly US, and what the impact's going to be as far as a decision and the stickiness of it. We've had crude jump, and that's the great the curse of higher crude prices is naturally the spike of inflation. If they stay at these sort of levels, that mid 80s, but they're nudging on 90 with Brent, 88.5. So, you've only got to see something gallop ahead, and that will not be the desired outcome of over a summer period in the Northern Hemisphere. And that could really spike things up. And as Larry Summers, emeritus professor at Harvard, knows, that he's putting a 20 to 25% bias to an upside tick.
Now, Peter, of course, this comes amidst earnings season in the States. We've had a couple of the Mag 7. We've got a couple to deal with this week, including Apple. What are your observations of what we're seeing? It's essentially it's dropped out of the Mag 7 along with Tesla, hasn't it?
Absolutely. So, it's a fabulous 5 at the moment, Andrew, and you've only got to see. I mean, Alphabet was just extraordinary. So that's very, very strong. Your earnings are your earnings. It's what people, whether they're liking your product, whether they're buying your product, and that impacts naturally performance of the stock price, PE ratios, and of course, cash flow. So if you're not selling the goods or you're not beating last quarter's, numbers, it's, as Jack Welch used to say, you hold the feet to the fire of the senior execs, and until they get burnt feet, then they start to realise that we're here for business, and you've got to stimulate sales.
Now, Pete, beyond the States, what are you watching? Some data coming to us out of the Eurozone?
Absolutely, Andrew. Flash GDP and, of course, CPI. I'm looking at Eurozone. You might nudge it up to around about 2.2% quarter on quarter for the January to March quarter. We all know that Q4 last year was flat. So let's just see. And then the impact naturally that has, I see your chart there as far as Euro, US dollar. You're running that at around about 1.07. We've got a US dollar index, Andrew, at 106 flat. And, if the talk of the town from Fed Chair Powell is one of, pushing out the rate hikes, then that's going to, I think, force US dollar even higher. And that will probably drag down naturally euro, yen, and quite possibly our dollar and certainly the British pound.
Well, speaking of the yen, what do you think we're likely to see, particularly from the BOJ, given it's close to 34-year low against the dollar?
Well, exactly. I remember '86 and the Paris Accord, and they had it 242. So it's a long way from that. But it's at 158, Andrew, and maybe 160. It's knocking on the door. Everyone thought you would have seen some form of intervention by now, but that's not the case. But it can happen at any time. They could do it, in the next 5 minutes, or they could do it in the next 5 hours, or 5 weeks, or 5 months. So we've just got to see how it all rolls, and don't hang by it, but be conscious that you've, depending upon your trading strategy, if something was to happen, it can really wash out the your long traders.
And Pete, China, what are we seeing there? We've got PMIs, but overall, are we seeing economic growth tip on the upside, do you think?
Well, I think so, Andrew. I mean, you look at the CSI 300, you look at some of those stock indexes, and they've had a nice little rally over the last month or so. You've got commodity prices are certainly far stronger if you're looking at the likes of copper, nearly at 10,000 a metric ton. So, yeah, overall, I think that the appetite of China and the internal demand is relatively okay. And how they export those finished products, as long as there's consumers globally that are buying them, then it's going to be a relatively good, I think, quarter for them. And naturally, you've just got to see how that materialises into third quarter and fourth quarter. We've got a lot on in the next 6 months, Andrew.